So my name's Alan Taylor. I'm the managing partner of Endeavor Catalyst, which is a global venture capital fund built on top of Endeavor, which is a worldwide organization that's been around 25 years, where we focus on selecting, mentoring, and supporting the very best entrepreneurs in emerging markets. And so we do this all across the world: Latin America, the Middle East, Africa, Southeast Asia, parts of emerging Europe, even some emerging parts of the United States, right? But we do this work everywhere. And for the last 10 years, I've been leading and running a venture fund kind of built on top of this model, where we invest in the best companies at the scale-up stage. So that's kind of Series A and B, really regardless of business model. So it's sector agnostic, but it's very geographically focused in that we believe the best companies of the future are going to come out of all these emerging economies. So today, Endeavor Catalyst is about $500 million under management across 4 funds. We've made more than 250 investments. Very fortunate for us, about 50 of those, so 1 in 5, have grown up to be a billion-dollar company, whether publicly listed or acquired or still private. And so I think we're starting to show that this really does work if you can invest in these kind of frontier and emerging regions. Yeah, it's a great topic to focus on and think about kind of the role of LPs in all of this, because there's a lot of focus on entrepreneurs, as there should be, right? The entrepreneurs are the star of the movie, right? They're the agent of change that are really making the difference. And then we need great GPs and great funds with, specific theses and strategies set up to invest in those entrepreneurs. But in some ways, I think kind of the key part of this whole stack, or this pyramid, if you will, is building an LP community, right? And having people who understand how and why to allocate to the asset class, and how to do manager selection, how to even, like you say, how do you start? How do you approach this? I think one of the keys, first of all, for any LP, whether it's a family office, an individual, a government program, is to think a little bit about both the financial goals and the non-financial goals of being an LP. And financially, it just makes sense for everybody to have some exposure to alternatives and privates within a balanced portfolio. It shouldn't be 100%, right? But it should be meaningfully more than a couple percent. We could talk about exactly how much, but I think, having a 10 to 20% kind of chunk of whatever assets you manage allocated to this actually makes sense for everybody, right? It's just sort of smart financial sense. Then the kind of non-financial goals of, okay, well then how do you do it, right? And do you want to be investing globally? Do you want to be investing in Silicon Valley, in the United States? Or do you want to be trying to kind of invest in the innovation ecosystem in your home country or your home region? And that's where I think we've had a lot of success with Endeavor today. We manage, as I said, over $500 million across all these funds. We have more than 500 LPs. So we consider these folks, most of them are high net worth individuals, family offices, a lot of them entrepreneurs themselves. They're our key community and sort of our key stakeholders in building the future together. So it's very much about making money. Don't get me wrong. Like, it's a good financial investment for them, but they're allocating to our fund that believes in investing in these parts of the world, because they also think that venture capital can have this kind of higher purpose in a way. And, I don't consider myself an impact investor. That's not what we are talking about here, but it certainly has a big impact, right, in terms of what it can ultimately do in these places. So one of my mentors in everything I've learned, over the last 15 years of doing this, is Reid Hoffman, who's the co-founder of LinkedIn. And he's the chairman of our fund, of Endeavor Catalyst, and really been really helpful to me. And one of the things he reminded me of early on was that your deal flow only gets better over time. Meaning you're excited, you have a thesis, whether that's to be an investor in companies or investor in funds, but ultimately, whatever amount of capital you want to invest, having a portfolio strategy where you take that amount of money, divide by 10 or 20, and then you try to invest in that many companies, or in the case of being an LP, that many different funds, right? So you get some diversification in what you're doing. I think the most common mistake is people get excited, they announce, hey, we're going to invest $50 million, and they put it all in 2 funds in the first month, right? So no diversification on manager selection, no time diversification in that. And so I think having a goal, but really thinking long-term about how to actually deploy capital and how to allocate capital. We'll probably get into this, but this is a really long-term sport, right? And the liquidity cycles are really long. And so even thinking about deployment, even before you get to cycles, just initial deployment of when you're going to start something new, how and when to kind of allocate that money to build diversification into it, I think is one of the most important things. I think anyone who is not yet an LP who wants to start to get exposure to this asset class should ask themselves a couple of questions. I mean, one is just a philosophical one of how do you think the world works, right? And if you believe that individuals actually can have a real impact on the world, then this is a great asset class to be in, right? And sometimes I even call our work or venture capital, it's like the remarkable individual theory of societal change, right? It's this idea that like really special people, and by the way, this is where we believe those special people are kind of globally distributed, right? Talent is everywhere. They're going to build companies, they're going to run funds, they're going to do these really remarkable things. And if you believe that that is kind of where the future comes from, then you want to back the builders, right? You don't just want to be invested in the existing industries, the existing, kind of big companies you can go buy that are publicly listed. Like this is where the future comes from. And so if you're philosophically aligned with that, then I think it's a matter of, okay, how do I want to build a thesis around which piece of that innovation economy to invest in, right? And a lot of folks immediately say, okay, well, I want to go where they are the best in the world, and I want to go invest in Silicon Valley. That's actually a good part of any thesis, right? Like I live here for a reason. I get exposure to the best and brightest, folks in Silicon Valley, lots of new ideas, lots of things all the time. But I don't invest here, right? I invest in emerging markets because actually that is where the biggest opportunity is over the next 2 or 3 decades. And so, not to be a commercial for emerging markets, but in a little bit like, if you ask yourself, like, do I want exposure to this kind of theory of change? Do I believe in this as an asset class? And then where's the future growth of the world coming from over the next 2 or 3 decades? And that's the right time frame to think of for venture because the cycles are so long. So it's not like, how do I make money this quarter or even this year, right? But what do the next 20 or 30 years look like, and what's the best way to kind of get behind it? I think those are some of the questions potential LPs should ask. And, we were talking about this before. A lot of our LPs are, they run some of the most successful businesses in places like Brazil, Mexico, Indonesia, Turkey, South Africa. They're investing in our fund because it gives them global diversification, right? Not just their home market, but 40 different markets around the world. But they're also backing a bunch of emerging managers in their home market, right? Or their home region. And I think that's ultimately going to be this idea of venture capital truly becoming global, which is what we're seeing, right? If you look, when I started my job at Endeavor in 2006, right? So it sounds like a long time ago, but you go back 16 years, there was very little venture beyond sort of the US, China, India, Israel, and a little bit of Western Europe, right? Today, there's a thriving venture ecosystem in Latin America. There's a thriving venture ecosystem headquartered in kind of Singapore and Jakarta for Southeast Asia. It's really starting to build in the broader Middle East and parts of Africa and parts of Central and Eastern Europe. So this is going to be a global industry. It's just a matter of kind of having the right exposure and access to it. So one of the things I think we may have gotten wrong as the world over the last 2 decades is a lot of this stuff where we tried to build an asset class called impact investing, where we really wanted to be like double and triple bottom line in everything we did. And it was very noble in the goals of it. But if you look at the actual implementation of it, there are not that many success stories out of it. And it's because there's kind of a tension built in there where anytime you make an investment, you're either putting kind of financial outcomes first, or you're putting some other goal first, clean water or access to, whatever you're trying to serve. And so my personal kind of view and philosophy on this is, for it to work, because human beings respond to incentives, you have to put kind of the financial outcome first if you're going to build a fund that's going to be really successful. So where we sit today in kind of November 2022, venture capital and frankly, entrepreneurship and unicorns and everything are capturing a lot of headlines. So it's an interesting moment to think about my kind of multi-decade, view on where this whole thing goes. One thing I will say is that venture has cycles. And we don't have time to get into the whole theory of this, but if you study kind of the way they go, the way that talent moves in cycles, the way innovation moves in cycles, therefore the way kind of venture will move in cycles, there are going to be ups and downs. And so the fact that we had a really, really long up and then now we do have a downturn is something I think, I'm trying to learn from people who did this in 2009 or in 2001, like, okay, what do these cycles look like and what is different this time and what can we expect? But one thing that's clear from everybody I talk to is that when things sort of start to tip down in certain ways, it is a great time to build. It's a great time to start. It's a great time to be investing in kind of early stage projects. And so, I'm a part of kind of advisory committees and boards of, half a dozen emerging market funds. Almost all of them are probably going to invest more capital in 23 than we did in 21 in kind of the peak hype. And that's because this is earlier stage, kind of at the beginning of the ecosystem type investing. So the dollars deployed in 21 by SoftBank and Tiger and all these big guys, it can be hard for those dollars to be matched in terms of capital deployed for a long time. But I think kind of where nobody's looking in the early stages and in the frontier markets, we're going to be doing more in this kind of next 2-3 years. At least I am, right? And with my own capital, I'm really excited about kind of this opportunity. It does also create, we're living in a moment where there's a bunch of headlines just in the last couple of weeks about 1,000 people got laid off at this company and thousands of people are laid off at this company. Well, there's a natural consolidation on the rise of a lot of the best talent does get sucked into a few companies, right? You can think about when this was Google and when it was Facebook and most recently it's Stripe or Airbnb. When a lot of those things get kind of dispersed, whether it's because there's liquidity and IPOs and folks kind of naturally leave, or there are these more kind of exogenous events, where you have 1,000 people leave at once, those are amazing people to go to startups and go to new companies, right? And so if you kind of have this theory of ecosystem building, I think there's going to be a lot of amazing new entrepreneurs to back in these places. And I'm using Silicon Valley examples, but you can zoom in on, Brazil, Indonesia, Nigeria, Georgia, right? You can zoom in on any of these system level ecosystems and say, hey, some of the talent that was part of building Gen 1 of some of these companies is now going to go off and build Gen 2, right? And so some frontier markets, we're still building Gen 1, and we have to really double down on doing that. And then in others, it's really exciting to see kind of these mafias of people, to use the PayPal mafia type language, going out and starting kind of the next gen of companies. So it's an interesting moment in time, to be sure. With our own LPs for our funds, we've kind of been looking at the data. We just put out our Q3 report for, last quarter. And yeah, it's slower, right? We slowed down for sure over some of the deployment we were doing last year. But as I think ahead, I think we will pick back up once the bid and the ask get a little closer together between entrepreneurs and investors in privates. And certainly in earlier stage, pre-seed, seed A, and frontier markets, I think it's going to be a really great moment over the next couple of years.